Cindy Lauper there from 105.7 Light FM. Good morning. I'm Morning Dave. We're at 8:42 here, 18 before 9.
Advisory services offered through Second Half Financial Partners, LLC, an SEC-registered investment advisor. The opinions voiced and information provided in this material are for general informational purposes only and are not intended to provide specific advice or recommendations for any individual. To determine which investments are appropriate for you, please consult with a financial advisor. Second Half Financial Partners, LLC does not provide tax or legal advice. Please consult your tax or legal advisor regarding your particular situation.
It's time to check in and find out what's going on with your money this morning. Philip Statler and I were on the phone beforehand trying to divine Apple's motivations for some of their price increases and non-price increases, but they sure moved the market yesterday. Philip's on the phone from Statler Financial Services. How are you, sir?
Hey, doing well. I wish I could say the markets were doing well. We are definitely seeing a pullback across technology. And we're going to, I guess, maybe we're going to continue to see that for a little bit until they can figure out where that bottom is.
Yeah, I believe that. And we're going between subsectors in the tech sector as well. I mean, we sold off ships right and left until Micron reported and hit it out of the ballpark. Now, after Apple yesterday announces that they're going to have to increase their prices, now all the hardware manufacturers are tanking this morning. It's not the time for tech to be considered a stable investment vehicle, if you ever did consider it stable. I was saying, you and I were talking about Apple. They announced yesterday they're going to have to raise prices on a lot of their products, and they're substantial increases. The MacBook Air goes up by $200. The MacBook Neo goes up by $100. MacBook Pros go up by $300, and iPads go up by $150 for the 11-inch iPad Air. One thing I noticed, and this is what you and I were giggling about, I checked my Apple Store app today just to see what they'd done to the iPhone. They didn't raise iPhone prices yet. Tim Cook's a pretty smart cookie. I'm betting a nickel he's looking for a major run on iPhones quick before the prices go up.
Yeah, I think so. I mean, I think it was obviously left off the list on purpose, and but it doesn't mean it won't happen. It may happen closer to September when they normally roll out the new iPhone. Maybe they're just going to wait until the new iPhone comes out and jack the price up across all their all their iPhone lines altogether. Who knows what his mode's going to be there?
Yeah, I'm kind of thinking that probably they'll bump the price up about 2 weeks before they debut the iPhone 26, 27, whatever the heck they're calling the next iPhone. Then they'll be able to say a no price increase.
Yeah.
After we bump the price to the 17th of the row. Net result is that Apple ended up being down by, 6% yesterday, and that didn't help any of the indexes. Dow ended up yesterday with a very slight gain. Everybody else is off. The Dow was up 72 points. Standard & Poor's was down by 73 cents. Then we get to the tech-dominated index, the NASDAQ, and it was down 118 more points yesterday. We've got to keep in mind that was after a bloodbath the day before. The Russell 2000 managed to tack on another 0.7%, but boy, the hardware manufacturers really got whacked yesterday, and Apple was kind of the poster child for the bunch, down like 6% basically on a couple of $100 increase on the price of a Macintosh.
Yeah, it doesn't take much sometimes. But, I'm finding it interesting because CNB's started putting the closing price of the NASDAQ 100 on their board now. And the NASDAQ was down by almost 0.5%. But guess what? The NASDAQ 100 was up 0.75% yesterday.
Now, that's interesting. You got to remember, there are two NASDAQ indexes that people quote, the NASDAQ 100 and the NASDAQ Composite Index that you and I quote on a common basis each day. Different ways of measuring the stock market, aren't there?
Yeah, there are. Definitely are, for sure.
Absolutely. Talking about incredibly stable investment vehicles, we do have to mention, because we don't get to it very often, boy, oh boy, is crypto in trouble. I have Bitcoin down around 59,000 at this point. It dipped down well under 59 for a while yesterday. I got to almost play a little violin for the poor clowns that bought it over 100,000 back a few months ago, don't you?
Yeah, it's what do we think? I think what it got as high as what, almost 120.
Yeah.
So yeah, I mean, you think about that. That's the people that bought it at that price, they really took a bath.
Doing math in my head, that's like a 45% drop in your asset value if you bought it at the top, and that's not fun by any way, manner, or form. It's all hangover stuff. Number one, Apple didn't help it a bit with the price increase going in. PCE inflation yesterday morning, close to what we expected, but still, when you start hearing 4% inflation numbers, it does scare you a little bit. Probably the thing that saved us yesterday is late in the morning, or actually mid-afternoon, we got a pleasant surprise on the gross domestic product, I gather.
Well, it actually came out yesterday morning, but we just couldn't find it anywhere. I guess it wasn't important enough for anybody to be talking about or reporting on. It actually came in better than expected at 2.1%. Versus the 1.7 expected. So that was a pleasant surprise to see the GDP revised. And I think that is probably the last revision for the first quarter.
And that's a bit of a relief because we've had some really disappointing numbers to come out on it earlier. On an annualized basis, we really got to stay above 2% growth just to be able to say the economy is growing at all.
Well, yeah, I mean, with the numbers we saw on the PCE numbers on inflation, I mean, you'd like growth to at least kind of keep up with inflation, right?
Absolutely. And at 4%, it's not doing anything close to that, but at the very least, it's positive growth. I know they get concerned when it's much over 3. You get nervous when it's under 2. Well, okay, 2.1 at the very least is sustainable off of the first quarter. Now we can see if we can improve it. But it was interesting as President Trump was on the stump yesterday talking about how this is the best economy in history. And, okay, we'll let it sit at that. We're going to find out what the consumer thinks a little bit later on today. The University of Michigan, about 10 o'clock this morning, is going to give us their reading on consumer sentiment. I know the expectation isn't particularly good for that one, is it?
No, I haven't seen any. Actually, on my list, it doesn't even show up as an expectation. So it's going to be interesting to see where it comes in at. I did notice. Go ahead.
One of my tip sheets was saying they're expecting it to go up slightly. The Michigan sentiment number last time was 48.9. I'm not sure what anybody was smoking up in Ann Arbor, but they're saying they expect it to go up to 50.5, which kind of makes me wonder what they're smoking in Ann Arbor these days, doesn't it, you?
Yeah, it does. Interest rates have been ticking. I mean, they're still up there, but they've been ticking down off there because the 30-year was up to 5, a little over 5. It's back down to 4.87, and the 10 years back below 4.5. So we are seeing some relief in the interest rate bucket anyway.
I got to believe that has something to do with the expectations of the price of oil is going to at least stay under 90, if not under 100 for a while. That's got to give us a little bit more confidence anyway, doesn't it?
Well, I think it's definitely got to help for sure. I mean, that's the oil price is coming down. I did see a bump again yesterday or 2 days ago at the pump, and it hasn't come back down yet. So hopefully with this continued fall in oil prices, we'll see maybe a little bit of relief at the pump again here shortly.
Eventually, it's got to happen, but I keep reading the things that we're still getting only about 25% of the normal oil traffic going through the Strait of Hormuz. Mentioning yesterday, largely because we don't know where the mines are. We've got one narrow little path where we know it's clear, so that's getting about 25% of the normal traffic through the straits. So, like they've been saying from the beginning, oil prices skyrocket and then they drift down very slowly, and we're kind of seeing that at this point. Hey, all the stuff about chip markets and whatnot, of all the people that end up getting into the chip business heavy, IBM had a stock bump yesterday. The company unveiled a new chip the size of a fingernail that they're talking about for artificial intelligence, and at least one chip manufacturer is getting a bump off of it. That's good news.
It is. It is good news to see at least somebody benefiting right now, but we'll see how fast and that really goes away, right? And good news comes in, and then all of a sudden people kind of forget about it. I will say that Rocket Labs is getting a bump this morning,
Mhm.
not by much. They were up about 1.5%, but it's dwindled a little bit now. NASA announced that Rocket Labs will be providing some launch services for the next two missions. And so that's going to help their cash flow.
Okay. Speaking of space services and whatnot, SpaceX is now hovering right around where it opened after the IPO last week, which has prompted one of the other big IPOs to postpone themselves, I gather, huh?
Well, that seems to be the rumor right now, Dave, that OpenAI is going to push back their IPO until 2027. Again, nothing official has come out from OpenAI, but that seems to be a rumor that seems to be floating around the different news services.
It kind of strikes me that right now, as hinky as the economy is on tech, I kind of wondered about SpaceX and kind of turning out to be similar to what I was thinking. It ain't going to go as fast as Elon thought it was. Just given how hinky the economy can be for the tech stocks, I'm not sure I'd want to do an IPO right now for an artificial intelligence firm. That really actually sounds smart to this layman, doesn't it, you?
Well, I think so. I think it does. I mean, when you saw what happened, it was a lot of hype, and yeah, I'm sure some people made some money. But it's when you do the IPO, it makes you more responsible to the shareholders, and you're actually seeing a lot of companies now go back the other way, where they're going private, so that they can do more stuff and be more efficient and more effective without having to worry about kowtowing to the general investment public.
Absolutely. And the quarterly, and even if they go back to semi-annually reporting, it still requires managing a company, which in a growth company where there's a lot of speculation to begin with, that's really hard, because you're a slave to the next quarter report because you don't want your stock to tank because you took a moonshot that you're confident in, but the stockholders may not agree. So there's some positives to staying private as long as you can.
Well, there is. And in this case, when you have companies like this, the IPO really is out there to, it's the way that the owners, the original guys that started the companies and the initial investors can get some of their money back out of it. And that's really the way they do it. So that's why you have the IPOs.
It's how we turn Elon Musk into a trillionaire, right?
Exactly. Yeah.
Other tidbits, about the only other tidbit I've got on my list today is, yeah, have you ever shopped for a Polestar?
A what?
A Polestar.
I don't think so.
Big Swedish electric vehicle maker. They're
Okay.
quitting the U.S. market. Yeah, they've been banned by the Commerce Department because their Chinese parent company is Geely, and we don't want Chinese electric vehicles around here. So Polestar joins Studebaker, Datsun, Pontiac, Oldsmobile, Plymouth, Mercury, Saturn, and a whole bunch of other labels we're never going to see around this country again. I hear Jamie Dimon drives one, though, but he might be the only one in the country. Anything else on your agenda this morning for tips?
I don't have anything. It's really quiet. You can tell we are at the end of the quarter, man. A couple more days and we will be into the third quarter. Hard to believe.
Yeah. When Philip and Dave mark time with gossip, you know it's a slow day. Re-summarizing and setting the table, it was a decent day, adequate anyway for the blue chips yesterday, but the tech stocks really took a bath. 45 minutes before we open this morning, what are we looking at?
Dave, as we get ready to start today, I'm sorry, I just hit the wrong button. Let me push back here to the right button so that I can tell you where we are today. We are a lot of red ink, unfortunately. The Dow right now is down about 0.2%. The S&P 500 is down 0.5%. Remember I said yesterday that the NASDAQ 100 was up 0.75. Well, today, to start the morning, it looks like they're down about 1.4%. And the Russell 2000 is down about 0.7%. On the other side of the coin, silver's up marginally, up 1/3%, as well as gold up about 0.4. Crude oil, like you said, down almost 3.5%. but it's really about where it was yesterday, $69.44 a barrel right now.
It actually stabilizes in that $70 range. I could live with it for a little while until we get the strait handled. By and large, the overseas markets were not happy whatsoever by the price increases and the ups and downs in the tech business. The Asian Rim, where we buy all those memory chips, they're saying we're raising the price on, was uniformly down. The mainland Chinese indexes were down by over 2.5% at the 6 a.m. close. Europe not particularly happy either. The average European index halfway through their trading day is down by about 1.2%. So we're kind of bathing in red ink this morning, 45 minutes before we open our equity markets, Philip. If I wanted to get my retirement together and I was looking at today's action as a guide, I probably shouldn't change strategies. I need to have one. How do I find you to get one?
You know, Dave, that's important. As people get closer and closer to retirement, they really need to have a plan in place. It gives them a roadmap to follow and to make sure that they're on the right course to that retirement they always dreamed of. And give us a call at 863-382-0037. Schedule their core retirement analysis, where we'll make sure that they're going in the right direction for their retirement. And then join us this weekend for the Statler Financial Radio Show, 6 a.m. and noon on Saturday, 10 a.m. on Sunday morning, on News Talk 730 AM and 95.3 FM.
And online at newstalk730am.com as well. Sir, you have a marvelous weekend, and I'll catch you next week, all right?
All right, buddy. Take care.
Be well, my friend. It's 105.7 Light FM and Statler Financial Services. Philip Statler.
Folks, again, I want to thank you for joining us today. Hope your weekend goes well. Look forward to speaking to you again next week. Until then, have a great day. Bye now.